Hello, everyone, and welcome to another edition of the Forex Market Update. This is actually our first update for the year, and I hope you all had a happy holiday and are ready again to tackle the Forex markets and to tackle the markets in general. Now, what we had was that the dollar has been strong and has been strong essentially ever since June. And for those of you who have attended any of my webinars, this situation is exactly what I speak about these large trends that occur in the market. So what do you have in front of us is a daily chart of the US dollar index. And we see that the dollar index bottomed out in May and has increased ever since up until Friday, which is Friday was the 10th of January, or was it the 9th? So yes, Friday was the 9th of January. So we have a situation where we have now a multi-month rally in the US dollar. Looking at the weekly chart of the US dollar index, we see that, or let's take a look at the monthly chart first. We see that the market broke out of this triangular consolidation pattern, and that's one of the reasons why you're seeing such an aggressive move upwards, because the market actually closed above the triangle and is moving upwards steadily. Now, the thing is, going back to the daily chart of the US dollar index, at some point this market will have to retrace. It cannot just keep going up and up and up and up forever. But what I would advise is that you do not fight this trend at this point in time. You have to wait until the market retraces, because this trend has been very strong so far. This point could very well be the top of the trend, but we don't know that just yet. And so I wouldn't recommend going short just yet in this, any long-term shorts just yet in this scenario. Moving on to the euro, we see that it's similar to the dollar index, except the market moved the opposite way. The market topped out in May and has gone down and is now at 118.40, and in May it was at 140. So that's over a 2200 pip move down in the markets. So exactly when I speak about these large pip movements, this is what we're speaking about. Now, if you take a look at the monthly chart of the euro, we see that we're coming up, and we breach slowly, or breach briefly, this all important resistance area or support area here near 118, and we have another area of support just above the low is 116.62. So we have previous chart support points at 116.62 and this 118 area. So this area you may find to be pretty significant support. And if the market closes below these two areas on a monthly basis, we may see continued selling in the euro currency. So for now, the euro is in a pretty significant downtrend. Taking a look at the British pound, we see that the market bounced off of pretty strong support. This is a monthly chart of the British pound, and we see we have a consolidation pattern here, second point, third point, and the market bounced on Thursday off of this trend line. And going down to the daily chart, you see that the bounce occurred right here. Market bounce off of this area and is heading up slightly. Now the question is, will this area of support hold, or will it be just a temporary setback for the British pound US dollar? We have to wait and see what will happen in the weeks to come. Moving on, in looking at the gold market, and we have gotten a lot of questions about gold recently, but what's happening in gold is that we are on a consolidation pattern. And folks, technical analysis is just very important. It's very important for you to know how to read the markets and draw your technical indicators and your support and resistance points. Your support and resistance points are key to determine, that will give you the clues to determine where a market is heading. Okay, so we see that we have a triangular consolidation pattern here on the daily chart for gold. Looking at the weekly chart, you see the consolidation pattern. Now the rule is, normally when you have a downtrend and the market enters a consolidation pattern, what normally happens is that the market continues in the downtrend. That is a rule of technical analysis. So we just have to, so in all likelihood, you remember trading a game of probability. In all probability, this market should continue to head down. But we just have to wait and see if this trend line holds and the market is rejected further. If the market does break below these, break out of this triangle, we could see the market move down to the 1,100 level and then down to the $1,000 level. That's the situation here in gold. The Australian dollar also, we have had a pretty significant decline, and I know a number of our members were able to book some tidy profits on the Australian dollar, the short that has occurred in the Australian dollar, moving from 94 down to a low of just above 80, so almost a 1,400 pip move in the Australian dollar so far. We're not at an area of significant chart support on the weekly chart, but if you take a look at the monthly chart, we see that there was a previous low that was made back in 2010 that the market has bounced off of this support line. You can see the support line, this red line that I drew, and the market bounced off of that support line. So again, it's very important to draw your support and resistance points. And if you day trade, I mean, this support point could have been a good target for your trading, because when you hit these long-term areas of support on the chart, more than likely the chart will bounce, or the prices will bounce off of this area, even if it's temporary, but the price will bounce. And so far we have had almost a 200 pip bounce off of this support point. Okay, so the final currency we're going to look at is the Japanese yen. And although the US dollar has been strengthening so far this year, the Japanese yen has been strengthening against the US dollar and is actually up on the month so far. At the beginning of the month, it started at 119.76 and we're currently at 118.26. So that's something to look out for. And looking at the euro yen and the British pound Japanese yen, we see that the yen is increasing across the board. So this is definitely something to look out for. And what we find is that sometimes when you have weakness in the US stock market, that causes the Japanese yen to increase. So if we take a brief look at the S&P 500 index, we see that we have some weakness and some stalling out in prices, and the Japanese yen sometimes act as a precursor for a correction in the stock market, because we have seen over the last couple of years, when the stock market goes down, the Japanese yen will strengthen, and it serves as a safety play. So we just have to keep an eye out on that. And once again, I welcome you all and hope you had a happy holiday, and I hope you make a resolution to make this year your year in your trading, and I wish you all the best for the year. This is Beyond. Thank you very much for listening. Have a good day.